Have you ever felt like business is just this endless zero-sum game, a constant battle where you're just fighting for scraps of market share against a whole sea of competitors? Well, what if there was a way to just make all that competition irrelevant? That's the whole idea behind the book Blue Ocean Strategy by W. Chan Kim and Renee Malborn. The core concept is this: stop fighting harder in the bloody red oceans of existing industries and instead create blue oceans. These are completely new, untapped market spaces that are just ripe for growth. It's a huge shift in thinking, really. It's about moving from competing to creating.
All right, so to really get our heads around this, we're going to break it down into 6 main parts. First, we'll get into the big difference between red and blue oceans. Then, we'll dive into the heart of it all, a concept called value innovation. After that, we'll look at the actual tools you can use to chart your course, explore 6 different paths for finding these new markets, and finally, we'll talk about how to execute the strategy and lead that change in your organization. So, let's jump in.
So, let's start with the big question. What is fundamentally wrong with the way most companies approach strategy? I mean, for decades, the playbook has always been about one thing: competition. Beat your rivals, grab a bigger piece of the pie.
And this way of thinking, it basically locks companies into what the authors call red oceans. Think of it like a shark tank. Every industry you know of is in this tank. The market boundaries are defined, everyone knows the rules of the game, and they're all fighting over the same group of customers. Now, what happens when that space gets more and more crowded? Well, profits start to shrink, all the products begin to look the same, and the fight turns into this bloody, cutthroat battle just to survive. That's your red ocean.
It's a pretty vivid image, isn't it? A bloody shark tank. So if the red ocean is a trap, how on earth do you get out? What's the alternative to this just endless fight? Well, the answer is you create a blue ocean. This is the wide-open, completely uncontested market space where there's no competition because you created it. And the engine that gets you there is something called value innovation. This is really the cornerstone of the entire strategy. See, instead of obsessing over what your competitors are doing, you focus on creating a massive leap in value, both for your customers and for your company. It totally breaks the old rules. Traditional strategy always forces a choice. You can either offer more value, but it's going to cost more, or you can offer a lower price, but you have to sacrifice value. Value innovation says, hey, why not do both? It's all about achieving differentiation and low cost at the same time.
Now, the key thing to get here is that this isn't just innovation for innovation's sake, like some new technology. It's about linking that innovation directly to what buyers truly value. A perfect example they use is Cirque du Soleil. They didn't go out and try to build a better, cheaper circus to compete with the big guys like Ringling Bros. No, they completely reinvented what entertainment could be. They took the thrill of the circus and blended it with the artistry and sophistication of the theater, creating something nobody had ever seen before. And suddenly, their audience wasn't just families looking for clowns. It was adults and corporate clients happy to pay a premium price. They didn't beat the competition, they just made them irrelevant.
Okay, so creating a leap in value sounds great, but it can also feel a bit abstract. How do you actually sit down and do that? Thankfully, the strategy gives us some very practical, very systematic tools to help us find and chart a course to a blue ocean.
The first tool is called the strategy canvas. It's a really simple but incredibly powerful way to visualize what's actually happening in an industry. So take a look at the US wine industry back in the late 90s. This chart maps out all the key things the industry competed on. Price, marketing, how complex the wine is. The lines you see, those are the value curves for premium wines and budget wines. And what do you notice? They're basically the same shape, right? One's just a little higher than the other. They were all competing on the exact same factors. This is literally what a red ocean looks like on paper. Everybody's strategy is just a copy of everyone else's.
So how do you break out of that lookalike strategy? Well, you use the 4 actions framework. This is all about challenging everything. Every single thing the industry just takes for granted. It forces you to ask 4 really powerful questions. First, what factors can we completely eliminate? These are the things that have been around for years, but that customers might not even value anymore. Second, what can we reduce way below the industry standard? This helps you find features that are over-engineered, that cost you a ton but don't add much value. These first 2 actions are all about driving your cost down. Then you flip it. Third, what factors should we raise well above the standard? This helps uncover the compromises customers have been forced to make. And finally, the really exciting one, what factors can we create that the industry has never, ever offered? This is where you find new sources of value and create brand new demand.
Let's make this real with the wine brand Yellowtail. They used this framework perfectly. They eliminated all the intimidating wine jargon and the whole idea that wine needs aging.
They reduced the complexity of the wine itself and the overwhelming range of choices. All of that drove their costs way, way down. Then they raised the price just above the super cheap budget wines, and they invested heavily in their retail partnerships. And this is the magic part. They created totally new things. They created a wine that was easy to drink, easy to choose, and they marketed it with a sense of fun and adventure. They weren't selling to wine snobs anymore. They were selling to beer drinkers and cocktail drinkers, a huge market that had been totally ignored. And the result? A completely new value curve and a massive blue ocean of their own.
So the strategy canvas lets you see the current battlefield, and the 4 actions framework helps you design a new attack plan. But the big question is still out there. Where do you even look for these blue ocean opportunities in the first place? How do you find them systematically?
This is where the 6-path framework comes into play. And this isn't about gazing into a crystal ball or trying to predict the future. It's a set of 6 reliable routes you can take to reconstruct market boundaries and find new opportunities. Each path challenges one of the core assumptions that keeps most companies trapped in that red ocean. You can look across alternative industries, across different strategic groups, across the chain of buyers, across complementary products, across the functional or emotional appeal of your industry, and finally, across time. Let's dig into a couple of these paths just to see how they work in the real world, starting with the very first one, looking across alternative industries.
Okay, so alternatives are just different products or services that accomplish the same goal. Let's take business travel. An executive could fly on a commercial airline, right? Or the company could buy its own private jet. Totally different products, but they serve the same purpose. NetJets looked at the huge advantages of both options. Private jets, super fast, super convenient. Commercial airlines, much lower cost, very flexible. So NetJets asked, what if we could combine the best of both? And that's how they invented fractional jet ownership. You get the luxury and speed of a private jet, which is 4 hours notice, but you're only paying a fraction of the cost. They pulled customers from both of those alternatives and created a multi-billion-dollar market from absolutely nothing.
So that first path is about looking at totally different ways customers solve a problem. The second path is a little different. It's about looking across strategic groups within your own industry. So strategic groups are basically just clusters of companies in an industry that are all following a similar business model. Take the fitness industry. You've got one group, the high-end health clubs, with tons of expensive equipment, lots of classes, and really high membership fees. Then you have another group, home exercise programs, which are cheap and convenient, but, you're working out alone in your living room. The company Curves created a blue ocean by looking right in between these two groups. They took the low cost and the convenience of a home workout, and they combined it with the motivating community vibe of a gym, but they tailored it specifically for women. They got rid of all the expensive extras and just created a simple 30-minute circuit. It was a completely new model that captured the best of both worlds.
These frameworks are fantastic for generating new ideas. But let's be honest, a great idea is only half the battle, if that. You have to be able to actually execute it. So how do you make sure your cool blue ocean concept isn't just a clever idea, but a viable, profitable business?
This right here is where so many brilliant ideas fall apart. To build a solid business model, you have to follow the right strategic sequence, and the order is absolutely critical. It all has to start with buyer utility. Is your idea exceptionally useful? Is there a really compelling reason for a ton of people to buy it? If that's a yes, then you move to price. Is your price point accessible to that mass market? It's only after you've nailed utility and price that you look at cost. Can you actually make a profit at that price? You see, most companies do this completely backward. They start with cost and then figure out the price. The blue ocean approach flips that on its head. And finally, you have to tackle adoption. What are the hurdles from your employees, your partners, the public that you're going to face, and how are you going to get over them?
And a massive part of finding that exceptional utility is to stop focusing so much on your current customers and start focusing on non-customers. This is where the real growth is hiding. The book talks about 3 tiers of them. You've got people who are on the edge of your market, about to leave, people who consciously refuse to enter your market, and people who are in distant markets and have never even considered it. Callaway Golf did this perfectly. Instead of just building better clubs for existing pros, they looked at all the people who found golf way too difficult. So they created the Big Bertha driver, with this huge sweet spot that made the game easier and a lot more fun. They unlocked a massive new market by focusing on the people who weren't playing golf.
So you've got a great idea, you've got a solid business model, but now comes what might be the hardest part of all, the people. A blue ocean strategy is a huge fundamental change, and let's face it, people don't always love change. How do you get your own team on board? How do you overcome all the resistance, the politics, the inertia that can kill even the best strategy ever written?
This is the final hurdle, and it's often the toughest.
The old way of thinking is that to make a big change, you need massive resources and a ton of time to convince everyone. But the book offers a much smarter way: tipping point leadership. The idea here is that in any organization, there are certain people, certain actions, and certain activities that have a disproportionate amount of influence. So instead of trying to move the whole mountain at once, you just focus your energy on those key levers. A classic example is William Bratton, who turned around the NYPD back in the 90s. He didn't get a bigger budget. Instead, he focused his resources on the crime hotspots, he motivated his team with clear metrics, and he made his leaders get out of their offices and confront the reality on the streets. He literally tipped the organization into a new reality by focusing on what mattered most.
And running right alongside that kind of leadership, you have to build execution into your strategy from day one. You do this with something called fair process. It's a simple idea, but it's incredibly profound. People are way more likely to support a decision, even one they don't totally agree with, if they believe the process used to make that decision was fair. It's not just about getting buy-in, it's about earning trust and inspiring people to go above and beyond to make the strategy work.
And fair process really boils down to 3 simple principles, the 3 E's. First is engagement. You have to actually involve people in the decisions that are going to affect them. Ask for their input. Let them challenge your ideas. It shows them you respect their intelligence. Second is explanation. Once a decision is made, you have to explain why. This builds trust because people understand the logic, even if they don't love the outcome. And third is expectation clarity. Be crystal clear about the new rules of the game. What are the new targets? What are the new responsibilities? When you do these 3 things, you create a culture of trust and commitment. And without that, even the most brilliant strategy in the world is probably doomed to fail. So, after looking at all these frameworks and ideas, it really all comes back to this one single powerful question. It's not about being better than the competition. It's about making the competition irrelevant. By creating that huge leap in value for a whole new group of customers, you can leave that bloody red ocean behind and sail into the clear, wide-open waters of a blue ocean. The challenge for all of us, then, is to stop asking, how do we beat our rivals, and start asking, how can we make our rivals irrelevant?